And we're live here, 8/20/2019. We've got Matt, we've got Tim, and we've got our producer, Cody, on the back end, always putting things together. Tackle Trading's halftime report. Matt, how you doing this morning?
Tim, I'm doing very good. Excited to be here with the crew.
Square, flat here on an uptrend. That's been a very big juggernaut on your watch list. I'm sure you had that one up for a reason.
Fine, you should.
Stupid ads.
Oh, YouTube.
I hate them. I hate them so bad. YouTube making so many changes.
Matt, I'm just going to get you a YouTube Red subscription. Just my gift to you. So you never have to watch YouTube ads again.
Thank you. I keep telling them no, because I always say no to everything that websites pop up to me. I'm just gonna break down and get it. It's driving me nuts.
Yeah, YouTube Red. Actually, what got me was they made it so on your phone you can't close YouTube and still listen to just like music unless you have YouTube Red. As soon as they changed that, I was like, all right, you got me.
Yep, I'm getting it.
We pay for premium on FinViz. And the only reason we pay for premium on FinViz is because the ads are annoying as heck, right?
Terrible.
They're one of the worst pop-ups.
There's not a worse website for pop-ups than FinViz. And I really like FinViz.
I do too.
I really like it. But my goodness, FinViz, like every 3 seconds, there's a pop-up there.
C'est la vie.
That's
They're
like,
gonna make money some way.
I'll click on like those sites, just like, some clickbait site. But if I get there and it starts taking like more than like 5 seconds to even load the website because all the ads need to load, I'm like, I'm out. I'm gone.
You're such a millennial.
Dude, lack of an attention span. There's no doubt about it. They got to be efficient with their consumption of the media, Matt. I get it. But the ads are annoying. I will admit that to both of you guys. I find them annoying as well. YouTube seems to be getting more aggressive with it. I don't know what they're doing, what they've changed. Cody, I know you are the producer.
Yeah, Jess and I are working on the back end, but yeah, they're adjusting a lot back here. Like I have a command center now. Like,
all right,
really
I'm done with YouTube.
Yeah, YouTube it is. GE we're going to talk about today. Markets we're going to talk about today. It is a doji as we're waiting for the Federal Reserve to kind of come out with their, content this week. They've got reports. They've got different speeches that they're going to be given. They're going to be down in Jackson Hole. And the minutes are out tomorrow, Matt, but none of that is today. The market is dojiing. What's your read on the S&P?
Well, I think the market's just kind of in a fade action, waiting for the minutes to be released. We had Rosengreen come out of the Boston Fed yesterday and give an update on kind of where his head is at from an interest rate cut perspective. And he was only 2 Fed officials that are voting in this year to not support a rate cut in July. And so he basically said yesterday that he needs more evidence of a not a global slowdown, but a slowdown in the U.S. And we really haven't seen the U.S. slow down like we have around the rest of the world. The concern is that the rest of the world is bleeding into the U.S. from an economic perspective. And that's a little weird, Tim, because typically speaking, when you're talking about global recessions, it really starts with the U.S. and the U.S. kind of bleeds into the rest of the world. But that's not the case this time. The U.S. markets have been very strong in comparison to the world markets. And so the concern is the global economy, is Europe, is China, is Japan, is Australia, is New Zealand, is the UK, is Russia, is this going to bleed into U.S. economics? And Rosengren just basically stated he needed to see a little bit more evidence. We also have Quarles and Daily expected speeches in front of the Fed minutes to kind of give an indication of where the Fed is from a monetary policy. And then obviously the minutes are very important tomorrow with Jay Powell giving a speech on Friday. So I do believe we're going to get a lot better information coming into that September rate decision. And right now the futures market is pricing in at about 95%. So we'll see where the rest of the Fed is by the end of the week, in my opinion. And, we'll make sure to keep everybody on the team posted with anything the Fed does. And, that's going to be very important because if the Fed does start cutting aggressively, you should see price appreciation in the short term, not in the long term, but in the short term. So we'll keep apprised of that. Looking at this from a technical perspective, Tim, it's a doji fest right here coming into the resistance area, kissing off the 20-day downward moving 20-day moving average. So just a little bit of slowdown on a very slow news day. When you're looking at this from a 30-minute chart, you see a little bit of double top action. And here's what I'm kind of seeing on the price action here, T. You've got a breaking of support when the cash market starts opening up. It violates the 29.20 level of support. and then retraces back into it. Real struggling over the last 2 hours in the market, though, sitting at this resistance area. And I said in the pre-production show, Tim, if we can kiss under 29.15, 29.14, you should see some price depreciation coming into the market, but not aggressively. This is a slow news day.
It is a slow news day. And even with all that chatter on the Fed, the expectations on the Fed, I mean, I got to ask you, what is the risk? You know, the market doesn't seem to care until Jerome Powell comes out and says something. So all these Fed governors, do they have the ability to move the market at all this week? Or as a trader, Matt, aren't you going to wait for Jerome Powell?
I don't care what Quarles and Daly and Rosengren say, right? They're giving their opinion. There's 12 voting members. They're giving their opinion on where they think rates should go. And when you're reading the Fed, it's really trying just to read the tea leaves, because they never come out and say exactly what's on their mind. That goes all the way back to Alan Greenspan, who basically said that famous saying in 1998, if you understood anything I just said, I didn't say it clear enough. So this is Fed speak. And so you're just trying to read the tea leaves. But I think we'll get a big indication out of the minutes tomorrow. But obviously, we're going to wait to anything aggressive until we hear Powell on Friday.
S&P 500 has mixed signals on the intraday versus the daily. The daily is kind of a doji and flat. I actually see this as very bearish on the 30, the 60, even the 15. I know we're already to 1038. I just don't like the rolling over action, Matt. I mean, you broke below a pivot. You put in a new lower pivot low. We did hold 2,900, backfill a little bit here. Now we've got 3 hours in the day. It would surprise me if we saw extreme volatility today because of the aforementioned lack of news. But I'm not seeing this as a good sign for the bulls.
No, we were talking about 40 minutes ago, and we were talking about how the 15-minute chart was not lining up with the 30-minute chart, and that makes it from a very difficult day trading perspective when your intraday time frames are not lining up in the same capacity. And what I was talking about with that is you see this little, retracement back up into resistance, and then it forms a little bit of a bullish retracement, and that creates a little bit of a tough trigger there. But what you're seeing currently right now in the market is those time frames from a 1 hour time frame starting to line up from a bearish retracement, from a 30-minute time frame intraday forming nice little bearish retracement, to now a 15-minute time frame coming back in. If you, like I said, if you can clear underneath that 29.14 level, you have the 15-minute chart clearing a downside trend. You got the 30-minute chart and the 60-minute chart, which sets up a fairly decent day trading environment. But again, when we're talking trading here today, this picture here doesn't give the picture on the daily chart very much justice, because you're really just looking at a very slow doji type day. But those time frames are getting in line with one another, and a trigger under 29.14 should see 29.05.
Yeah, it's an interesting market condition that we're in. There's no doubt about it. As markets move up and down, there's action and there's interesting opportunities in individual companies, including some companies that have earnings today, Matt. I do want to talk about some of those, including Kohl's and Home Depot. We had some retail earnings. Before we do that, though, give me a quick run through on the Dow, the NASDAQ, and the Russell. They tend to all be in line lately. I know the Russell had kind of diverged a little bit from the other broad markets, but on a day-by-day price action standpoint, it feels very, very similar.
Well,
all these.
And I sound like a broken record when I'm looking at these types of situations, like we were looking in October, November, and December of last year, and what we're looking at right now. When the market violates support on a daily chart, every index is going to do the exact same thing, because the market capitulates to fear, and it capitulates to fear a lot faster than it does embrace the greed side of the market. And so when you see that fear coming down, it's going to impact every index, every sector outside of maybe utilities and real estate in very similar formations. And then what happens is the market settles down, takes a breather, goes to timeout for to a certain extent. Then the market starts to separate itself based on fundamentals and based on technicals. And so when you're looking at the market right here, you're going to see a lot of similar type price action. Maybe the Dow's underperforming the S&P a little bit, and maybe the S&P's underperforming the NASDAQ to a certain degree as well. But they're all going to look very, very, very similar until you start to see trends develop. And that's going to happen coming out of the Fed, in my opinion.
Yeah. Bring up Home Depot, and then obviously Lowe's is up on the news as well. But Home Depot had earnings and they actually missed. They cited some tariff risk and all that kind of stuff, but they had some positive issuances as well. There was some risk in the report, but the market is up here today, 4.3%. Did you get a chance to look at Home Depot earnings?
I did. And, I read through the report, saw their numbers. They came in at 3.17 on earnings per share versus the expectation 307. Revenue came in line at 30.8 billion versus 31 expectation. They had a slightly lowered guidance. When I read the report, I didn't take it as a very positive because of the slightly lowered guidance. Obviously, with a beat on earnings per share, market kind of celebrated that and really kind of gapped up. And you had not only Home Depot, you had TJ Maxx, you had Kohl's also come out reporting earnings. And one of the better performing sectors today is the discretionary sector. It's one of the only two positive sectors on the day as well. The technology sector is going to go negative here fairly soon, in my opinion, but it's really the best performing sector on the backs of Home Depot. Really, you also had TJ Maxx here, Tim, come out with earnings as well, and I did get a chuckle, but I'll tell you why here in a second. They came in at 6.2 on the earnings per share versus the expectation of 6.2, so they came in line with earnings per share. Guidance was slightly lowered, not bad, but it was slightly lowered. It had an increase of 4.8% year over year. Tim, what do you think revenues out of TJ Maxx is? How much? I mean, we know Apple sells, 80 billion, and Walmart sells 130 billion. And
how big is the company?
I don't know the market cap.
TJ Maxx stores, let's say they sell $300 million worth of product a year.
They sold 9.8 billion.
Are you serious?
I'm dead serious. That's why I chuckled.
I went comically low because I was thinking you're trying to underball me. But
no. I've been around the market for a very long time, and I still get shocked every now and then. But
wow.
Yeah, TJ Maxx 9.8 billion in sales versus expectation of 9.9. I was expecting, when I looked at it,
that's on the quarter,
800 million. Yeah, that's a quarter.
That's quarterly. That means they do 30 or 40 billion dollars.
They must have. I don't track TJ Maxx, and that's why I don't know much about it. But they must have a lot of brands out there too. So, but yeah, they came in line. So market response a little bit down on the slightly lowered guidance here on TJ Maxx. No real trade there. The only thing I would keep an eye on if you are looking at TJ Maxx is you're looking at a really significant support level right here at $50, Tim. If you close underneath $50, I mean, it's look out below for TJ Maxx. You're looking really the next support level isn't down to 41.5 by 42. So you got a lot of depreciation here coming into TJ Maxx, maybe 45 first target with the secondary target of 42, but that's only under with the close underneath 50. But that is a significant support level for TJ Maxx. And one of the reasons why it's responding a little bit bullish despite the gap down is given the fact that strength of that $50 support level is so very, very strong. And then you had Kohl's coming out with earnings here today as well.
On TJ Maxx, and I don't know all the brands, but I just read the profile on the fundamentals tab on Thinkorswim. They have exposure in Canada, Europe, and the US. Home chain stores, they do all kinds of different stores. Marmax, Home Goods, TJX Canada, TJX International, Marshalls.
It just reminds me of the fact that these companies, these publicly traded companies, we think of them just as what their symbol is. They're TJ Maxx, right? Yeah. But we don't realize that they own a tremendous amount of other things. And that was just a little surprising here today. And then you had Kohl's here on a negative earnings report as well. Real disheartening for Kohl's. That's a bearish retracement. Projection has to be down from here. Earnings per share came in at 155 versus 1.52 expectation. Slight miss on revenue at 4.4 billion versus 4.5 billion. Year over year, 3.1% decrease in sales, and they basically reaffirmed guidance. So a mixed bag on earnings. I'm not seeing any of these three companies with blowout earnings or just horrible earnings, just a typical market response to the earnings here. But again, coming to the discretionary sector at this point, the only sector, outside of technology, to really kind of show some upward movement in price today.
Yeah, other companies that are newsworthy here today, Matt, Facebook and Twitter. I got to bring this one up. I find it to be a real fascinating evolution with the companies. I know Facebook has to start doing this kind of stuff, but they blocked some state-sponsored media that was coming through Facebook and Twitter in China and Hong Kong.
Good.
This basically was going to come out and do some anti-protester type stuff.
It was
Facebook
propaganda.
and Twitter caught it, and they said, we're not going to allow the propaganda. I applaud them. Honestly,
Yeah, so do
I thought it was an incredible story.
I rip on Facebook as much as anybody else. It's a company I can't stand, and Zuck, you just don't trust him in any capacity. That's just my opinion. But you got to applaud him for doing the right thing with what China was trying to do with the propaganda. That was BS coming out of China, and to see Facebook saying no, we're not gonna allow you to manipulate the people so that you can stop your political protest. I thought it was great from Twitter, and I thought it was great from Facebook. Still not a company I would touch.
Yeah, no, I did like them.
Although Twitter, I do like, and Twitter triggers, and if
does
Twitter
trigger.
A 43 break would be another trigger on Twitter.
And any of our students that read the reports this weekend made that trade.
Yeah,
I kind of like Twitter as a better position trade. I'll tell you.
Me too.
The choppiness day by day.
Mm-hmm. It's volatile, right? It's one of those companies like Micron. It's volatile. When you catch a good trade, you can make a ton of money on it, but it's going to whipsaw you quite a bit. There's a lot of great trades from the bull side on those scatter reports this week. I mean, EW, Starbucks, Shopify, Take-Two, Twitter, Yum, all triggered, all doing good right now.
Twitter, part of one of our Tackle 25 lists. I think it might even be on the Tackle 25.
It's dirty, sexy money.
Is it dirty, sexy money?
Twitter does not have the fundamentals to be on the Tackle 25.
Maybe next year if they.
I'll give you a quick take on maybe next year.
Look at that EPS trend.
It's a decent EPS trend. It's actually a good EPS trend.
Mm-hmm.
It's got good PE ratio, better than the 5-year average. I take it back. It's better fundamentals than I originally just thought.
Fundamentals have dynamically improved this year.
Look at that. I mean, 96 cents loss in 14, 79-cent loss in 15, 65 cents loss in 16, 33-cent increase in 17, and a $1.56 in 18. Yeah, that's a growing company.
Well, and even
that's
just
a company coming to maturity.
The book value per share, which is something I track quite a bit. Whenever we're doing that Tackle 25 discussion, those are numbers we look at together. And that's a huge jump between 17 and 18. I know their quarterly earnings have been strong this year. It's on our list. We like the company.
Yeah, I'll kick Facebook off and add Twitter.
There you go. No debate.
Sold me on it.
That's a pretty easy one right there. Speaking of which, we will be updating the Tackle 25 if there are any updates. We're pretty conservative with moving stocks in and out of that map, but probably by next month, I'd say, as the quarter kind of comes to a close.
Yeah, we got a lot of earnings reports. I haven't seen anything too devastating coming out of the Tackle 25 stocks, and we don't remove stocks on the Tackle 25 just because short-term volatility to the downside. Because Tackle 25 traders add put options to protect the investment. So we only remove based on fundamentals, not based on technicals.
Fundamental differences. 3 quick stocks I want to take a look at: Apple, Disney, and Netflix, and talk a little bit more about this streaming competition that's coming down the pipeline. Apple is announcing that they're launching their own streaming service in November to come out right when Disney's streaming service comes out. I'll probably end up paying for all of these for some crazy reason, Matt, is the way that it works. $9.99 for Apple. Disney's coming out with that. That was a big.
That's the crew. I want to get it. I want to get a take on this because just out of my own curiosity, how many streaming services would you maximum subscribe to? Because every single company is coming out with their own version of whatever it is. The networks are coming out with them. Disney, Apple, everybody's coming out with them. I mean, would you do 10, 12, 15? Or, no. I mean, what's your max? I mean, Netflix, Amazon Prime, Disney Plus, Disney Plus with the bundle with Hulu and ESPN. I mean, where's your max, Tim?
Dude, I'll tell you, I mean, it comes down to family needs, obviously. And if you've got the disposable income to be able to pay for entertainment like we do, I mean, we have these choices, but you still got to choose. I'm going to get the NFL every year, no matter what. So if you call that one or not, I don't know. DirecTV.
You'd have to. You have to. It's a streaming service.
I'm going to pay for Netflix and I'm going to pay for Spotify. Now, my wife is going to pay for Apple products and my kids are going to want Disney. So I'll end up paying for all of them. I'm like the perfect consumer for these guys because I have different people in my family that will demand this, Matt.
I'm Netflix. And definitely the Disney bundle. Anybody with kids, Disney bundle. Amazon Prime, that's 3, and then Sunday
Hulu?
Ticket 4th.
Hulu?
Who?
Hulu?
Well, Hulu's part of the Disney bundle. So the Disney bundle is ESPN, Disney Plus, and Hulu at like $12.95. I'd say I'm 4 or 5. I'd say, but at that I'm out.
Yeah. Yeah, I have to go look and count them all up. I know that they're betting that everybody's going to be paying for them, Matt. They're all launching them for a reason.
Well, it leads
Amazon
me.
Prime, HBO.
Well, I get that. Yeah, definitely HBO, but I get that. But it leads me to think that maybe the networks are making a mistake by going to their own streaming instead of licensing them through the juggernauts. Mm-hmm. Netflix pays mint premium for those network companies, and maybe the networks are making a bad decision of going streaming instead of licensing.
Yeah, could be as well. I know this Apple, the news got it up here today on a day where the market's kind of flat and doing its thing. Also, Disney and Netflix are both, in fact, and maybe not Netflix. I didn't look at Netflix chart yet, but I saw Disney was up today about 1/3% or so.
Yeah, it's finding some support, but that's just a technical move more than anything else.
Neutral and short term, probably going to be neutral till that comes out. Netflix has been bearish. I've had this on my bearish list for a long time. It does look like the clear loser out of this fight right now, Matt.
Oh, it's because they're losing their licensing. They have a major problem with original content, and the House of Cards, that debacle is hurting Netflix. So yeah, they're going to be a loser here, and obviously the market's responding. 300 is going to play a role. This fake out trigger kind of got people frustrated, but I'm still looking at a short on Netflix.
Yeah, and if you're watching our show right now, you can always tune into the halftime report. You don't need these streaming services. We do this each and every day. And if you're here for the very first time, guys, give us a like, give us a share, subscribe to our channel.
Our YouTube's free.
It is free. It is free.
There's a nice, easy button in the bottom corner that I added for you guys. Right down there. Click on it. It'll subscribe you right away.
Yeah, make sure you're coming back here each and every day as we do our daily routine. A lot of companies in the news here, Matt, but let's move on to the dollar commodities. And let's start with the dollar before we go into commodities. $ DXY, if you will. Fed expectations this week. Obviously it's going to push the dollar one way or the other, but we're not really doing a lot here today. Doging and hesitating up near resistance. Are you still bullish on the dollar? Are you neutral? What's your read?
Yeah, I'm still bullish on the dollar. I'm not looking to get into anything until after the Fed minutes tomorrow, though.
Yeah. Cody, what about you?
It's overextended from a price action technically. I don't see the dollar as a great swing trading vehicle, to be honest with you. I mean, there's going to be certain setups in the currency market that are wonderful swing trades, amazing swing trades. But specifically on the dollar, I like it more as a day trading vehicle than a swing trading vehicle. But it's just, you have to have the perfect setup from the dollar index to have a great swing trade. And right now you just don't. You're a little bit overextended. You certainly are bullish here, Tim, in the short-term trends. I believe we have the dollar at the positive 30-yard marker. And, maybe you get a retracement coming back down to the 20, but there's no entry up here on the dollar in front of the Fed.
And it's not just the dollar either. I have a lot of trade setups that are just sitting there. I've been staring at for almost a week. I like the Aussie against the Japanese yen, the CAD versus the British pound. They're all just sitting there. Nothing's really happening right now in the currency markets.
I think Jackson Hole is important. And Tim, you and I had a little bit of a debate on the podcast yesterday about the importance of Jackson Hole. And, I certainly agree with your opinion of Jackson Hole, that it's usually an event for academics, usually an event that, doesn't really have a great market response to them. And most of the Fed's, actions that have a great market response are on unknown events, not a known event. But given the fact that we just started lowering rates, given the fact that there's a lot of question if we're going to continue lowering rates and how that would impact the global markets, I think Jay Powell is going to have something to say about it. And so I think the currency market's kind of waiting for that.
Yeah. Well, and there's also other news out of the administration. I don't know what you guys' take is on this, but they were talking about out of the White House potentially cutting payroll taxes, which could be a boon for U.S. economy, which always makes me think of the currency markets, Matt. That was big news overnight. Director Kudlow did come out and talk about potentially another tax cut. Do you think that's just posturing? Think it's important? I actually kind of like it, but
I like it as a small business owner. But if you want to spur growth, you need to cut consumer taxation. We've seen the tax policy that came out of 2017 has not spurred growth. And I talked about this on the podcast yesterday. in an environment where the entire world is now lowering interest rates, increasing money supply, increasing stimuluses. Germany's talking about stimulus packages. China's talking about stimulus packages. We've increased the negative yielding bonds from around the world by over 200% in the last year, over 16 trillion negative yielding bonds in the last year. And have we seen that spur economic growth in Europe? Have we seen that spur economic growth in the UK? Have we seen that spur economic growth in China or Australia or New Zealand or anywhere around the world? The answer is a big fat no. That is all that's done is created a stagnation market in this entire world. The powerful leaders from around the world, they're trying to keep this market afloat with anything they can do, and it's not going to work because of how much negative yielding bonds we already have in the world, how the inverted yield curve just happened last week. I just don't see I don't see how lowering taxation for corporations yet again is going to spur that growth. And it just drives me absolutely crazy here. But the number one thing this economy needs to really kickstart it and start doing something fantastic is velocity. It needs velocity. You can print all the money in the world. You can go into all the negative yielding bonds, negative yielding currencies. If you don't put more money into consumer wallets, consumers can't spend that money. Consumers need a tax break. They need it right now, and they needed it in 17, and they needed it in 13, and they needed it in 2008 when we did this stupid thing called the bailouts. You should have bailed out the American consumer instead, and that would have spurred velocity of money, and the money would have went to corporations anyways. So we can sit here and talk about how we go negative yielding bonds, negative yielding currency, corporate tax decreases. None of it is going to spur growth until consumers have more money in their wallets to spend on non-discretionary items.
Mm-hmm. Mm-hmm. It's amazing when you think about it. I mean, that money question really about income, expenses, and having that extra amount to be able to spend is an important part of almost anything. It does spur the economy, and it spurs so much of this. Taxes are a component in that, but also wages, Matt. Whenever we look at the economic data and I see how much the stock market's gone up, and then I look at wage growth and it's like 1.5% a year. I mean, it makes me realize
wage growth is 16% over the course of the last 38 years.
Yeah.
16% over the last 38 years. Corporations having more money does not equate to people having more money.
Start a business, become an investor, learn how to grow your wealth on your own. There's no question about it. You're not going to get rich working for somebody else. You can pay the bills. Don't get me wrong. Being in the E quadrant's an important thing for a lot of people. There's no doubt about it, but you can't get stuck there. Speaking of investing, by the way, I do love gold here today. I know it's only a 2-day little kind of hesitation pattern, but crude oil's neutral. A lot of the energy stocks are neutral, kind of flat. I want to take a look at all these commodities, Matt. I like this gold chart. I don't know where the entry point is from that perspective, but I don't think
throw a dart. Who cares?
That's what I'm saying.
Everything I just said leads to buy gold, right? But there's an interesting article that came out today. There's a hedge fund, and I apologize for forgetting the name. It's a hedge fund that controls about $2.1 billion. And it's doubled the performance of the S&P 500 year to date. One of the better hedge funds year to date and they're up like, I believe, 30%. And Tim, it was just released because when you run a hedge fund, you have to release 13 Fs, right? Which basically states what you're accumulating, what you've gotten rid of, what do you own, stuff like that. And they had increased their gold position in the second quarter by like 180%. It's one of the reasons why that is the best performing hedge fund year to date. And, I mean, we've been touting this shiny precious metal since last October, so we're not going to stop now. I like gold here. I like it at 1,500. 1,500 is a very important psychological level for gold, and it's obviously paid defense over the course of the last week and a half as well.
I'm getting interested in palladium here, Matt. I don't own any palladium at this time. I usually trade palladium for different reasons, different purposes. It's been a good trender. Last year was an incredible juggernaut. The candle 1st of August brought it down, kind of killed the pattern a little bit, but now we're running. I mean, we are really running. On the longer term charts, I see upside. And I still like the metal itself in general. Does it got to break above that 1,500 low pivot? Do we got to break out the highs?
Absolutely. Breakout of 1,500. That's a trigger.
Yeah.
It's kind of like this breakout of 1450 kind of consolidation. But if you can reclaim that support pivot, obviously get back above 50-day moving average, I could see money coming into palladium in the short term.
Yeah, yeah, I do kind of like that one. I'm paying attention to it. Copper bearish, by the way.
Oh,
Oh, yeah, that HG.
oh, yeah, HG. I always put heating oil for some reason. Oh,
It's
yeah,
ugly.
it's ugly, but it's got a pretty clear trigger too, right there.
Back onto crude oil, biggest commodity in the world, just happens to be boring here today, 0.46% down in the red, but kind of stuck in this triangle pattern. In my opinion, Matt, you're a technician. You've studied as many charts as anybody I've ever met. And these symmetrical type triangles, they have complexity to them. They're very unpredictable.
I hate trading symmetrical triangles.
Yeah.
I absolutely can't stand them. I hate them. And it's not that they're not legit. That's not what I'm saying. It's just the way my mind works. It's like, okay, you break out of this very consistent trend line, very solid trend line, but you have a trend line that's pushing up against that on a support level as well. And that's what's creating that triangle. And you know, the trigger on a triangle is when it breaks the trend line. But again, and I'm not saying it's not legit, Tim. What I'm suggesting is that the way my mindset works, if you break up above that level, I just automatically just gravitate to the left of the chart. And I'm like, well, if I trigger above that, well, what about that wick? And what about that? And I have a very difficult time. A lot of traders love these types of patterns. They're just not for me. I like trading when I have multiple trend lines coming in together, where the short-term trend and the intermediate trend are all lining up together, and it just makes trading easy. These types of triangles where you have multiple time frames kind of leading into a misdirection to a certain extent, it just drives my little mind crazy.
I don't like them either. I mean, you could argue bi-directional volatility and all that kind of stuff, which is fine. I mean, play a straddle on it if the numbers work.
Yeah, you can. Okay, if you want to talk options, yeah, an option trader is going to find an edge. I mean, that's just going to happen, right? An option trader, Marty the elephant, my best friend, is going to find an edge as a trader. There's no doubt about that. But you know, if you're just directionally trading, that's what I was talking about.
I'm with you. Bitcoin, by the way, kind of a symmetrical triangle pattern as well, you know, kind of almost very, very similar in some regards, much more volatile, much more unpredictable, much more even than crude oil, news driven on random stuff that you can't predict. But Matt, we're stuck in the middle of a long-term range here and a short-term range, and I have no read on this. Neutral until otherwise noted. That's my opinion on Bitcoin.
Anybody who says they think they know where Bitcoin is going is like saying, I know what a stock's going to do on earnings. They're lying.
Yeah, right.
This little puppy can do whatever it wants.
Sure
it
can
go to 20,000. It can go to 3,000. It can do whatever it wants. And as a trader, I don't like that because there's no edge.
Yeah, I'm with you. And we're going to do rapid fire here just in a minute, guys. Get your symbols ready. Pop them in the chat whenever you want to. Before we get there, though, Matt, a couple of quick notes. Tonight after the bell, Toll Brothers, you know, we do like that company. Cree's coming out with earnings.
Toll, Tackle 25 stock, guys.
Correct.
Great covered call the last 7 months on Toll.
It's been perfect. Yeah. Dividend payer, covered call company. I like that
company,
one.
fundamentally strong company. Would you protect earnings here? Obviously, if you're doing covered calls, you're adding a caller.
Personal opinion on this one, I don't think I would.
I don't think the evidence suggests it. I mean, it's got some volatility here.
It's not bad practice to collar before any earnings.
I wouldn't collar neutral delta.
No.
Right? I'd collar with maybe a 25 delta.
Yeah, buy the 34 put option. That way, if it gaps below support or something like that, short term, spend a few bucks on it.
If you're collaring, you've sold a 40 delta call option. You had a 0.25 delta put option, which means you're covering 65% of the downward movement in price.
Better question or equal question: would you uncollar and just hold the equity into earnings? Or uncover?
I would do that much more than holding a covered call through earnings, which is the most ridiculous thing ever.
It's one of the worst strategies.
It's one of the worst strategies ever. Cap might gain, unlimited risk to the downside, offset with the cash flow. You either got to collar or you got to uncover. I probably would collar here. Give me some options on trade management tomorrow. But I could understand somebody saying, don't.
Yeah.
It's not Netflix. I mean, it's Toll Brothers.
If you are a Tackle 25 trader, a covered call trader, an investor, congratulations. One of the best ways to approach any kind of longer term accounts. You got to know how you're going to handle the earnings. Build it into your rules. Make sure you finish that course, the Tackle 25.
By the way, I'm with Blake too. Whenever I think of Toll Brothers, sometimes I think of Toll House, the cookies.
Were those the elves?
I think they were the elves. Were they the elves?
Exactly what I think of every single time. I don't think of a home builder. I think of the cookies.
Well, they are one of the biggest home builders in the U.S. So, and who is it? DH, KB Homes, Lennar.
There's a bunch of them. D.R. Horton, KBH, a bunch of them for sure.
The elves is Keebler, the Keebler elves.
Yeah,
doesn't Toll Brothers own the Keebler brand? Probably. I don't know. Are
we having another TJ Maxx discussion here?
We're not having cookies discussion right now. No cookies for lunch. All right. A couple other companies with earnings, Matt. Probably the biggest one is Target tomorrow. Tackle 25 stock company that we like quite a bit. They pay a dividend. They've got great brand awareness. They've had an incredible year too. I would, if I was holding equity, collar this one. I would do some kind of protection on this one going into earnings.
Yeah, especially year to date. I mean, year to date, you're up a good rock solid 30%. So,
yep.
You should when you're up year to date 30% in a stock, and it has gapping personality. That's not a difficult discussion.
Yeah, I agree with that. And we're now going to move on to our rapid fire section, guys. Each and every day that we do Tuesday and Thursday, rapid fire, Matt, where we come in and review the companies that these guys are interested in. You pop them in the chat. We get a quick look at it. We give you a quick analysis, rapid fire style. The first one we're going to start with, Matt, is not in our chat. It's one I'm going to give you. It's GE.
You wanted it so bad, and then you're like, I forgot to rip on GE today, and so it's going to be the first one we look in rapid fire, and I'm going to take this. I said it yesterday. It's a short.
Definitely bear pivot. So much negative news.
Did you see the news?
Yeah.
GE came out today. I guess they were underperforming long-term care or something along those lines.
Mm-hmm.
I just saw the headline. Obviously, GE down 3%.
They were ranked one of the riskiest long-term care companies in the world. It's like, oh,
yeah.
I guess they've been listening to the Tackle Trading halftime report for the last year, as Tim's been railing on this company day after day after day.
Dude, I mean, I'm not right all the time, but I've been right about this stock for a long time, and I'm going to continue to hold that posture and the positioning against it. I'm short, so I got to have that fair disclosure on that. Netflix is next. I'll take this one. We talked about it. It's bearish. The only thing I'd say about Netflix is keep an eye on your levels here. There's no doubt about it. You've got strong support down here. You got a little bit of gapping personality in the stock, but a close below 300, I still think is tradable, Matt. I don't know where
I do too. It's tough on the trigger, Tim, on Netflix, given the fact that this one got blown up, but it got blown up because of Trump's Twitter account last week. That was a perfect trigger on the downside. And then obviously the market responded with snapback rally coming out of that, saving Christmas tweet from last week. I still think it's a good trade under 300, though.
I do as well. Let's move on to, and let me find one, Halliburton here. Cody, you're going to take the next one?
Oh, the next one's actually the HCA, which I was going to take.
HCA, back May had this one, Matt, and then I'll give you Halliburton.
HCA. So HCA, it's got that low base on it. And we actually looked at this one, and it's got that small base here that's forming, but it's got a lot of support at 120. So we actually put the trigger at below 120, which is an ATR away. So you got to wait on this one until it breaks 120.
Mm-hmm. Yeah, I like that. Halliburton, Matt, you're going to get this one. It's an easy one to rant on a little bit here. Oil stocks, markets have been bearish here on the energy sector. I think we have the most bearish rating on XLE out of all of our different sectors.
By far.
Halliburton.
Halliburton, a tremendous bearish downtrend here. Is slowing its momentum as stocks do as they get lower and lower and lower. Looking at a little consolidation here, maybe a snapback retracement coming into 1920. Got major support resistance right here at about $20. Love the trigger on the downside when it got past $20. Still like it today. Trigger's got to be to the downside underneath the low of today.
WM on 812's option report. WM was actually out there. A nice little bullish breakout to the upside. Was it there this week as well? I was traveling. I believe it might have been. I mean, it's got a nice high base there.
I don't know if this was on the report or not, to be honest with you.
Yeah, intraday is coming back here on one candle map, but that's still holding its beautiful uptrend. I like the upside here still.
As long as it stays above.
There for the next one.
I would say as long as it stays above 118.50, don't worry about anything.
Yeah. Lululemon, Cody, you wanted CF. I skipped it. I'm not going to allow you to prepare for these, Cody. See, you try to count down so that you
don't understand rapid fire, Cody.
No. I
Well,
get to jump around.
I'm also just watching him skip some, and it's like, all right, you're going all kinds of out of order.
Yeah, yeah, yes, I am. Keebler Elves and Toll Brothers. We've had all kinds of conversations today, but you get Lululemon here, Cody. What you read?
Let's see, Lululemon. They pull up my screen over here. Let's see. I actually don't see too much to really play on. I mean, it's sitting right there at support 180. It's just a neutral pattern. I don't see it as bullish as it's been throughout this year. There's nothing tradable that's telling me one way or the other.
Yeah, yeah. You know what I just realized, Matt, is when you jump around on a trader, they don't like it. It drives them crazy because they got that analytical checklist brain that they've developed, right?
No. Rapid fire. You get used to it.
Yeah. CF is next. We're going to go back to Majid. Thanks for catching that one, Cody. And I'm going to give this one to you, Matt.
Yeah, CF, very deep level of retracement here. Mark's data, Coach Mark over there at Tackle Trade, you guys all know him. His data on these types of deep pullbacks is very, very, very detailed, very impressive. And these deeper pullbacks that come in between the 20 and the 50 in this cycle, not in every cycle, but in this cycle, they have not been really good performing. We want to buy into strength here. To me, this is just, you got to reclaim $50 before we even start any conversation.
Yeah, I would agree with that. Boston Science, BSX, this company that we've had on our watch list many, many times. Upward consolidation here, Matt. Long consolidations on these time corrections, it makes it that much more powerful. It's like a king toes in the backyard in the summertime. When you let it go, there's upside here potentially. And I do like this chart and that pattern up there on the top. There's no
some of the better position trading opportunities are on extended short-term trends that are neutral. And then it breaks out. That's a good trigger for a position trade. Wonderful stock, fundamental stock, and Tackle 25 stock for a few years now.
Beautiful, beautiful setup there, Jonathan. Thanks for finding that one. We've already looked at Netflix, ABBV, and we're going to kick this one back to Cody.
Let me take myself off mute when I look at that. ABBV. Actually, I kind of like it as a pullback, but it falls right into that 2050 that Matt was just explaining. Even though it's only got 3 days up, we do have a candle with a nice high wick. Potentially tradable, but I'd actually like it back below 65.
Yeah.
That screams reversal to me, guys.
Yeah. Some strong green candles there.
Well, it's just it's not just that. It's the consistency here versus what we're seeing here. I wouldn't touch this either way, but
yeah, there's some risk on both sides of that one. Obviously, the downtrend's still there, but there are some subtle signals there that would probably disqualify. We'd veto that from the scouting reports. Let's just say it like that. Definitely veto. LPSN, a couple more here, Matt. I think maybe one more for each of us, maybe a little bit more, and then we're going to run. Actually, I'm going to give you the next 5, Matt. LPSN, give me a read.
Short-term bullish uptrend, intermediate bullish uptrend, expanding moving averages. And what you see here is these moving averages are expanding. You're seeing the momentum in the trend get stronger and stronger and stronger. Tried to break out of this short-term snapback retracement, kind of held up yesterday, real strong on today. I like it here. I like it with stop loss underneath 38 with the trigger above intraday levels of resistance. And you can kind of see those, the high of the day. So pretty standard swing trade here, Tim. Trigger above the high of the day, stop loss under support, 38.
AAL, American Airlines. I'll take, actually, I'm going to keep you on this one.
Okay,
here.
American Airlines. Bearish, tremendous bearish downtrend here, slowing its momentum. The market responded real bullish, but American did not. That's showing overall relative weakness. It's no trigger here, but if you can consolidate another couple days, maybe perhaps underneath $25 with a short trade here on American Airlines.
Yeah, I agree with that. WIR.U, Teresita. I've not seen this one before.
WI what?
IR.U. I'm not seen this symbol before,
like
so this will be.
Or something?
Oh, not slash.
No, it's nothing. There is no .U's.
Yeah, give me the name of the company, Teresita, in an email. Maybe I'll look it up for you. AMD, Matt. I'll take this one here because I have a naked put on it down at 25. Still like it in that regard. It's neutral in the short term though, so maybe some cash flow stuff you can do on it. It's a wonderful tradable instrument. AMD trades more shares and more options than almost any other company in the market. It's right up there at the top all the time. So keep it on the watch list for neutral cash flow, but until we break out and give me some clarity, I don't see a directional move there. And the Wisconsin Badger here, David Kaiser, NVIDIA. Matt, kick this one back to you. 2 more, 3 more, then we're done.
NVIDIA neutral in the short term, neutral in the intermediate for any trade. I mean, covered calls, neutral positions, iron condors, they all work in neutrality. But when it comes to trading, you gotta let your trends develop. And NVIDIA has just had a very difficult time year to date in developing a strong trend. It really starts with 125 and 192 from a trading perspective. Cash flow galore, but trading, you don't trade within neutrality.
Neutral. Amgen and Twillo, Matt, two more. I'm going to have you take them both.
Amgen coming out earlier with earnings last week. Good price appreciation. Broke out of this short-term consolidation. Look at that downtrend it broke out of. This is one of those symmetrical triangle type triggers, Tim, that traders do love, that I can't stand. But it would have worked out. Now you're coming into that top end of resistance here, right there at about 208. Look for Amgen to consolidate. Look for it to retrace back down, forming a nice little trigger. So either the consolidation with a high base, maybe a bullish retracement, but that could be tradable at that point.
Symmetrical triangles on the weekly candlestick chart that we're on right now. I mean, I actually kind of think they're very strong trend signals when they do break and run, obviously. I mean, that was a significant trend line that you had drawn there, Matt, a perfect trend line that when it broke out and started to run, I mean, that's a huge signal to the upside.
Yeah. And that's why I said, symmetrical triangles can be explosive. Absolutely 100%. I just personally don't love them. So I never trade them. But when you're looking at that consolidation, as I was talking about, maybe it retraces, maybe it consolidates, but that's going to give you another good trigger after the consolidation or after the retracement.
Yeah, last one, Twillo, been a juggernaut of a company here, TWLO from Scott's halftime crew in here all the time. Kind of lost some momentum here the last month or so, Matt, but that was in such a beautiful uptrend. Break below support would be a very significant risk. What's your read?
That is an M formation in after a bullish uptrend, very consistent bullish uptrend, stuck at support right here at 123. Break this out to the weekly chart here, Tim. You're going to look at that very, very important level of support. Maybe you put that important level of support right there at 120, but investors should be very cautious right here. Traders, they're going to wait for a break of either 123 or 120 on the downside. There's nothing to the bull side here.
By the way, the options report this week has been killing it, guys. If you're looking for good setups and good patterns, go check the option report. There were 7 stocks that triggered on a Monday or a Tuesday in the first 2 trading days of the week, Matt. Starbucks, Shopify, Take-Two, a bunch of them. So definitely go out and check that out. And if you are a pro member, just type in pro member in the chat and let's get out there and let's promote that. Matt, we've got Coach's Show tonight for our pro members. And Cody, what is the topic and who are the hosts tonight? I think it's Gino and Grant. Is that right?
Gino and Grant are the topic or are the speakers. The topic is going to be a bear put spread.
Bear put spread. Appropriate time to learn a debit spread.
Yes, it is. Yep.
Matt, markets have kind of transitioned into
and let's face reality. Most traders don't just buy call options. They do a bull call spread. Yeah. Most traders don't just buy put options. They do a bear put spread. It's a wonderful way to offset risk, and it's a wonderful way to offset cost to get into the trade as well. So, and if there's one thing we know about the great Gino Poor, he loves trading cheap methodologies. So definitely make sure you guys have fun in the Coach Show with Gino and Grant tonight.
Yeah. And if you're watching our show and you're not a pro member, sign up for a pro membership. Give it a 15-day trial.
Just ask any of our pro members. Just ask our pro members. They know what Tackle does.
And no excuses. Show up and use it. You're going to love it. And we know that, Matt. Tackle Trading has an amazing product and community that we've created. And if you're out there and you're watching this right now, you're going to love it. Just go in there and use it and put your butt in the seat. And by that last thought,
step webinar tomorrow.
You got to finish the STEP system course if you're going to attend the STEP webinar tomorrow. So if you've not finished it, you can get it finished today and tomorrow to make sure you get that invite. Send an email to team@Tackle Trading if you have any questions.
Cody, put the link in for a 15-day free trial for everybody. Always do that at the end of the show, okay?
Will do. I can do that right now.
I love it.
All right. We're out, T.
We are out. Have a good day, everybody.